Hi, everyone, and welcome back to another show. My name is Tyler, and I'm with Matt, the founder of ORATS. ORATS is an options analytics platform built on over 15 years of historical options data. And our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Last week on the show, we focused on finding a long strangle on MTB. And today we're going to be reviewing the 4 pillars of successful options trading and introducing a new way to learn strategies and tips for trading that we call ORATS University. Matt, if you're ready, do you want to share your screen and go over the trade from last week?
Sure. Thanks, Tyler. So we're in here, paper trading in our positions tab of the dashboard. The dashboard's all the tools that we have. Of course, ORATS is built on data, so we have API console, but these are all the tools that we have, and we can manage our positions here. So as Tyler said, earnings kicked off last week, and we found a trade in MTB. This is an interesting one. One of the reasons that we found it was we thought it was very undervalued, not just for earnings, but just overall volatility in general, even non-earnings months. And so we put this strangle on, and it was about break even after earnings, but since MTB has rallied, so we're up a couple $100 as a matter of fact. So we could go and click on this. I've been watching it during the day because I wanted to exit it today. But if we look at the trade history, we could see how high this strangle was. It actually got up around $10. Now it's at 826. So we'll close it out. And theoretical value is 826. I think we could give them a couple cents here and get out of that for couple $100 profit. So that's a nice one, Tyler.
All right. Nice job, Matt.
And we should also look at our continuation of our SPY wheel strategy. So a couple shows ago, we sold this February 02 for $5.90, and it's 96 cents. So that's doing really well. And as you know, the wheel strategy sells puts, sells puts, sells puts, and then when we get assigned, then we turn around and we sell calls until it goes through our call strike. So that's doing pretty well. So yeah, trade's going all right here, Tyler.
All right, good to see that, Matt. So this week we're going to be doing something a little different. We normally go and find a trade for earnings or based on an option scan or a stock scan or back testing. And this week we thought it'd be nice to go over the philosophy of ORATS and sort of why we've built the tools we've built, designed all around the principle of you becoming a better options trader. And we've sort of built this mindset of these 4 pillars, and we call these the 4 pillars of successful options trading. And they are research, implementation, risk, and review. And all of our tools are built around these 4 pillars. And today we're going to be reviewing those and sort of going back and forth between the tools that we use for each pillar and how they help us make trades. And, Matt's been in the industry for a very long time. And that's sort of how ORATS has evolved through these 4 pillars. So we're excited to share them with you, and we're also going to be showing you our newly released ORATS University, which is a way for you to look at all of our stuff in really fine detail. We've explained a lot of stuff, a lot of tips and stuff that Matt's learned throughout the years. So we're going to be jumping back and forth between that and our tools. Does that sound good, Matt?
Yeah, it's a very good introduction, and I'm excited to get into this because sometimes traders feel a little bit lost, and there's so many things coming at them that I want to put this in your head. And if you come away with anything after listening to this, it's the 4 pillars of successful trading. And I think really all successful trader, at my time, like Tyler said, I've been trading since, you don't even want to know, but like many decades, and studying successful traders. As a successful trader myself on the floor of the SIBO exchange as a market maker, and then I personally backed 14 traders down there. So these are the synthesis, the approach that successful option traders take. So basically you're researching, and that has a lot to do with how are you going to find your edge. We like back testing. If people kind of boo-hoo back testing, everyone does some type of back testing. That's just looking at charts, looking at history, and seeing how you would have done had you traded a certain way. So one of the first things that we did at ORATS was to build a back tester. Actually, I should say the first thing that we did was create proprietary calculations, and we did that in the market making as well, because you really need to find your edge. And then once you find an edge, then you want to do some testing to figure out the best way to trade that. And then have the other types of pillars that are going to be important for you to take care of. How you're going to implement your trading. Whether market maker or a trader. If you're a trader, it's a lot different. Upstairs trader. And then that has a lot to do with scanning, and we're going to get into the details of it. And then you got to watch your risk. Always watch your risk. You don't want to have a chance of blowing out. Always. There's so many little risks, and as a market maker, you really learn them because you're taking the opposite side that other people are trading. But as a instigating trader, you still have a lot of risks that you need to manage, and we'll talk about those. And then having the chance to review, really journal, really think carefully about how you did, and if you have a good system for review, you'll find maybe what is your niche. You want to find what is your competitive advantage. You always want to be thinking about that. And then trading strategies, they don't last forever, so you have to watch it and make sure that your edge is continuing what your assumptions were. And that's why it's nice to have a back test, because you could look at the back test and look at how it was performing. Is it still performing the way you expected it to, or do you need to go back to the drawing board and start it over again? So that's kind of in general what the pillars stand for. Tyler, does that sound all right?
Sounds good. How about we dive into the first one, which is research. It's kind of it's one of our largest pillars, and we have a lot of data and tools around this. Very important to get off to on the right foot here.
So definitely. So of course, as I started to talk about, it's really, how are you going to differentiate yourself? How are you different? Like I always, when traders used to come to me, I'm like, how are you different? How is this strategy different? Why didn't someone else find it before or something? So it really involves at the very blocking and tackling fundamentals of trading is data. And how are you going to obtain the data? How are you going to do the calculations? And can you do these calculations consistently and with the speed that you need? So that's what ORATS is really focused on. That's one of the hardest things, was coming up with a very good system to kind of summarize these millions of options that are out there and do it the right way. And so that's one of the first things. So you start with this data, and then you could start to say, okay, well, how are we going to use those data as indicators? As are they more like a theoretical edge? So one of the things that we do is come up with one of the first things that we did was come up with a smoothing apparatus. So here's just the MTB that we were looking at earlier. But one of the hardest things I did as a software designer, having a software firm, it seems a little silly, but just drawing this orange line that you see in all these expirations is super important. And why is it so important? Well, it gives you a relationship between all the strikes, and then it gives you good theoretical value along this line, and also good Greeks. So you could imagine if this line was off, because of some weird or illiquid options, it's really going to throw off your theoretical values, your scanning, and everything. So one of the first things we do from the proprietary indicator standpoint was to come up with very good ways to summarize the implied volatility skew, come up with theoretical values, and then start to look at earnings effects, then start to look at defining how steep this smile is. That's our slope, we call it. And then start to forecast all those. And then once you have all that data, then you start to say, okay, well, how would I have done if I would have, bought this skew when the forecast was a certain amount? So there's millions of things you could do after you start to get this, but it really comes down to, and the basis of all of it is solid data and getting that solid data summarized.
Matt, that was a great explanation. I just want to show, go back to ORATS University, and we've sort of explained this process in depth from the beginning, and how we've developed these indicators over time and the purpose of them. If you go through, you can see option pricing models and sort of how we've developed the SMV process, and then what it means, when it comes to earnings, X earnings volatility, contango and skew and slope, and all these indicators that we've calculated. We've explained sort of how we've got there from A to B. So Matt, that was a great overview, but you can learn more in detail at ORATS University.
Thanks. Yeah, and then so once you get these, then that's why we developed the backtester. So then you could come up with ways to really use your great data the best way possible. And once you have back tests, we're doing a lot of things like, what if you combine a couple back tests? Like, what if you combine a long put with a short straddle? What if you combine a calendar with a diagonal? What if you have a double calendar? There's a lot of you do once you have back testing, and including using machine learning. Like, when is the best time to trade certain strategies? So what we want to come up with is a way then to find the best strategies using the best data, and then using our indicators to time it. We don't want to be trading during these days potentially. We don't want to be trading if the VIX is on an uptrend. We don't want to be trading this if slope is declining. There's a lot of things that you want to be looking at that, machine learning and all of the things out there right now can help you identify some of these predictive indicators, help you trade better. So that's one of the things that goes into the pillars here is research, is machine learning, and then getting that edge using those proprietary indicators, and then also using theoretical values once you start trading. And then once you come up with a strategy, there are best practices. You want to trade out of sample. You don't want to overfit. You want to, we could implement these on different symbols. We can, do forward testing with this, which basically could involve just updating the back test, and then we could do paper trading, and then just small trading of it. But what I said so far, you might say, wow, that sounds pretty complicated. Like, how are you going to manage all these things? When to get in, when to get out, if this indicator is doing this, if this indicator is doing that. So that really brings to the second pillar, is implementation. And really, your research doesn't do any good unless you have really good implementation. So when you're thinking about research, you have to think about the ability to trade it, to implement it, to when you're coming up with these trading plans, can you really do it? And so again, ORATS, we've really built our our company on this mission of research, implementation, risk management, and review. So implementation is really critical, and that's why we built a lot of the things that we've done. For example, you could go directly from a back test. The ideas here, because the trade ideas is just searching through the best back tests, and I could I like to search for these based on our theoretical edge, so the forecast edge. So we have a good theoretical edge here in a IWM long put calendar. So you can see now I've gone from a back test, and actually I'll step back because sorry about my throat. I've been talking too much. So we've gone from this back test here that we've identified through looking through millions of trades and millions of back tests. We've gone from this type of back test, and where we could look at the trade logs, we could look at a monthly return. So this looks a lot like a hedge fund might look. And once we like this strategy, then we could scan for other options. We could find similar back tests. That's part of the best practices that I talked about earlier.
Yeah. I just want to kind of interrupt and say this scan for options is a neat part of the implementation process, and it that sort of bridges the gap between the research, which is the back test, to the implementation. You can go directly from one to the other in our tools, and we also have a stock scanner, and like you said, the trade ideas, and I'm sure you're going to get into the market intelligence in a minute, but a lot of different ways to approach this implementation.
Right, and this is a fairly intricate strategy here, where the RSI is currently overbought. The percentile, IB percentile, is moderate, and then when you get in, there's a stop loss and a profit target. So so you're going to have to be able to see that trade. You could scan. Our scanner helps you out. Once you find the trade, then you have, and you could add your alerts in there, your profit alerts, 50, and then make yourself send this off. And then actually, Tyler, should we just treat this as our trade for the day?
Yeah, why not? It's showing up on the trade ideas with you sorted by forecast edge. So you can read more about that, our theoretical edges in ORATS University. But the forecast edge, it takes our forecasted volatility surface from our SMB process and boils it down to our forecast of slope and X earnings volatility, and then sort of calculates a theoretical price of the trade based on those forecasts. And then when we compare that to the market price, that's our edge. So that's sort of where the forecast edge is coming from.
Right. And so what we'll do is we'll just, we'll put this trade on, and then we'll check it out. We'll check it out next week. So I'll just force this at this price, and all right, cool. So that'll be our trade for the week. So we keep our streak alive.
Great.
Yeah, but what we were talking about was the ability to then manage that type of a trade, where now if any of those profits or loss limits are breached, then I get an immediate signal. Eventually, you could just send that trade when those are breached. So this is an important part of the ability to implement these trades with all this research, is this implementation. And as you can tell, that took scanning, that took exit alerts, and then also theoretical values, and also risk management is the next thing that you want to be considering when you're sizing up or implementing these strategies. So could we jump to the next one? Do you have anything more on implementation, Tyler?
I mean, implementation is a tough thing to get right. You got to have live data, you got to have scanners, everything's got to add up. And that's why we've built so many tools around this. It really requires a holistic approach.
Yeah, good point.
So yeah, with the risk management, we're working on building a lot more tools for this. But yeah, it's all about looking at your portfolio risk, and I mean, Matt has many years of experience managing risks. So
yeah, and it's about portfolio risks, but also max gain, max loss, and what are your Greeks showing, and then in your edges here, and where did you make money? So a lot of this is involved in risk management that we have on there, and we're continuing to add to this. But especially when you start saying like, this is my systematic strategy. I want to have X amount of thousands of dollars in here, and then that could even fit under another umbrella with ETF calendars. I want to have X amount in there. So one of the things that we do calculate is buying power for this particular one. So that's how we're able to then integrate risk management with the implementation. To again, seeing how all these are tying together, how research, implementation, and now risk management integrates with all these, super important. And because you want to keep your size in your back testing, you want to watch the drawdowns and how much you can handle, and so that helps. Kelly criterion help you size up your each strategy that you have out there, how to invest in your nest egg. So this is risk management, very important on that. It also, you could look at what we looked at before was these risk sides, max gain, max losses. That's important, and also it's important to look at the worst case scenarios. What is the worst case scenario, and are we still going to be okay? Are we live another day and trade if that happens? So all these are part of risk management. Whether it be your portfolio levels, can you handle that? At a sector level, can you handle that? At a stock level, can you handle that? So that's what we think about when we think about risk management, Tyler.
Yeah, really, really critical part of the pillars, and very key to becoming a successful trader. So yeah, what we're doing here is really empowering, everybody to have the tools that you need to, make money trading options. And the last pillar is review. And so that's sort of what we did at the beginning of the show today. We reviewed the trade from last week and how we performed. And that's sort of, a little bit about what this show, Driven by Data, is about. We're practicing that fourth pillar, reviewing our trades and making sure we're really being honest with ourselves about how it's doing, and then learning from that and practicing the things we've learned going forward.
And the key thing about this approach is that it keeps you consistent, because it's hard to review if you're haphazard. But if you're consistent, this gives you, and it takes a lot of stress out of it, because if you know what you're going to do, you know what your max loss is. Can you handle that? Think about it now. Yes. Can you handle it? If this happens, you don't have to panic. You have plans in place. And then if you have a consistent strategy, or a few of them, many of them, if you're paper trading, then you can start to review and say, okay, how did these strategies do? How did they do versus our expectations? How did they do versus what the back test would have predicted? This is super important that a lot of people overlook. And one of our next focuses is going to be, journaling these trades, tagging the trades, putting them all together, and then seeing how you did and answering those questions. Did it follow the back test? And then you could also figure out, well, I'm a lot better at this type of strategy. But I should caution you too that I see a lot of people that use journals kind of chasing their tail. Oh, this strategy did well, over the last month. I'm going to move over there. Well, when you've done your research, our research goes back to 2007. So that's a very long-term approach. So you don't want to be jumping back and forth. The review process is just to say, is it behaving like we expected? And if you have that approach, you're not going to be jumping all over the place. You're going to be able to follow through on these strategies and make sure they do well when you expect them to do well. And if they aren't doing that, or if they're doing poorly when you expect them to do well, maybe that's a time to look back over your research, your implementation, your risk management. Where did we fall short? So that's the entire thing to me. And then it's circular. That's why we drew the circle around it. Is you want to keep going, and you want to then continuing to do research, continuing to improve your implementation, continuing to look at risk management, other ways to look at risk management, because risk management could have been the problem. You could have missed something in the risk. Implementation could have been the problem. You could have have too much slippage, or your research might have been the problem. You overfit, so your whole strategy wasn't working as it can be. So that's all part of the review, to review all the pillars and make sure that you're continuing to do this. It's a circular approach. It's a continuous approach. It gives you discipline, and it gives you consistency, and hopefully it'll make you a much better trader. How about that, Todd?
Very good tips. I can tell you're passionate about it, and you really want people to take these lessons to heart. So it's that's what we've built ORATS around, these 4 pillars, and that's why we've launched so many of these tools. And we're keeping up too. We're making more tools, to just enhance these pillars and make sure that you have the resources at your disposal to make smarter trades and become a better options trader.
Yeah, you mentioned like the passion. I mean, because what I understood pretty early is, as a single market maker on the floor, I could only do so much. But I came up with a lot of these things to be able to have more market makers on the floor, more tools, more forecasts, more theoretical values, looking at risk management. We were always the first ones there and the last ones to leave, looking at all this stuff. So if you're going to make money, it is difficult. If you just want an easy way, you're in the wrong place. This takes discipline. It takes hard work. But after that, using the right tools, that's how you are profitable. And that's a way to really improve your trading and watch your risk and utilize these tools and make yourself a more successful trader, Tyler.
All right. Thank you, Matt. You can, I hope you guys got a lot of information out of this. But if you want to read more about it, we have orats.com/university. And that sort of dives into the 4 pillars in depth. The tools we've built around it are indicators and everything like that. So you can go there to read more about it. But thank you, Matt, for explaining all those.
And have people comment, if they have different ways, or if they're using this, or how they found this. We'd love to hear from you guys. So comment and let us know. Either contact us or in the comments of whatever video you're watching.
Great. Yeah. Thank you, Matt. Thanks, guys. We'll see you again next week.
Thanks, Ed.